All right, hey traders and investors, it's Serge Berger here. One of the most important aspects of making money on your own in the markets basically has to do with asset allocation. And there are various studies out there that also the big institutional investors apply, where it says that most of the returns comes from the right selection of asset allocation or the right asset allocation in general, as opposed to stock picking per se. So as long as you're in the right assets, in the right sector, or in the right asset class at the right time, then you're good. And it's actually very similar also within the equity markets, that we want to make sure we understand where the relative strength is coming from, say from which sectors, or which were the broader indices. So one of the things I thought we'd look at today is where's the relative strength at the moment and where could it be coming from. So for example, the relative strength as of late has been coming from some of the Nasdaq oriented stocks. So the QQQ's Nasdaq 100 divided by the S&P 500, you can see had a very nice breakout here over the past, let's call that the past, let's say few days actually, or so, or arguably less, let's say 2 weeks, has been a really nice move. And that, while it could continue to push higher, it's now kind of done. That breakout's done, and again, it could continue, but the breakout itself is done. If you now dig a little deeper and we kind of flip around, just play with some things, and you'll see a very interesting ratio here that I'm currently looking at is the Russell 2000 versus the S&P 500. So again, the relative strength or weakness that we could see. And you can see here we're talking about relative strength that's kind of been developing very much like the Russell 2000 itself. Looks like this is an index that versus the S&P 500 has now made that capitulation low in October, followed by a series of higher lows, and ultimately it does look like this stands a pretty good chance of going higher. So from that point of view, the asset allocation that I'm looking at right now is more tilted towards small cap stocks, more U.S. domestic stuff, than the large ones in the S&P 500 that are a little bit more globally diversified in terms of where the revenue comes from. So I hope this makes sense, guys. If you always got any questions, you can head on over to thesteadytrader.com. Check out what we're doing over there. Otherwise, hit me up on Twitter. My Twitter handle is steadytrader, and I'll see you in the next video.